I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. Authorities say a suspect in this afternoon shooting at a Florida high school is now in custody. Broward County officials say there is at least 14 victims involved in this incident. SWAT teams converged on Marjorie Stoneman Douglas High School in Parkland as students with their hands raised came running out. 3 people in a vehicle tried to make an unauthorized entry onto the National Security Agency at Fort Meade, Maryland this morning. That incident led to gunfire and left 3 people injured. Police say all of the gunfire was directed toward the vehicle and not the NSA building. Former Republican presidential nominee Mitt Romney will announce tomorrow that he's running for the Utah Senate seat held by retiring Orrin Hatch. That's according to the Associated Press, citing 3 people with direct knowledge of the plan. The former Massachusetts governor moved to Utah after losing the 2012 presidential election. A French court has acquitted a man charged with harboring Islamic extremists after they carried out attacks in Paris in November 2015. Jawad Ben Daoud had denied knowing the identity of the 2 men to whom he was renting. One of the 2 was the suspected ringleader of the Paris attacks. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Welcome to Bloomberg Technology. I'm Emily Chang, live from the Goldman Sachs Technology Conference in the heart of San Francisco. This is where Silicon Valley meets Wall Street every year, and we have been hearing from tech luminaries, from Twitter and Square CEO Jack Dorsey, who talked about how remaining independent he believes will be a strength for Twitter. And later today, we'll hear from Uber CEO Dara Khosrowshahi. Also coming up in this show, I'll be speaking with Goldman Sachs president and co-COO David Solomon, as well as famed venture capitalist Benchmark's Bill Gurley. But first, we've got Cisco earnings out. Corey Johnson, our editor-at-large, is back at home base with more. Corey?
Yeah, you're burning the midnight oil there. Good stuff. Can't wait to see all that. Cisco, however, bringing us some news, just crossing the tape in the last hour. $12 billion in sales in the last quarter, and sales up for the first time in 8 quarters. If you're keeping score at home, sales up is good, sales down is bad. Cisco also disclosing a one-time charge related to a tax overhaul. Company revealing some big plans for its big pile of cash. It has $70 billion in cash. Well, it's going to spend some of that by increasing the dividend up 14% and committing to another $25 billion to buy back stock. John Butler joins us right now. He covers Cisco for Bloomberg Intelligence. He's in New York. He just talked to me on the radio, so we're going to pretend, John, to have this conversation for the first time. People watching the radios or listening to their TVs or vice versa know this has happened before. Really interesting quarter from Cisco. What worked?
Yeah, I mean, as you said, Corey, sales up, very good. And what was really good at Cisco is the core business here really is sales. It's over 20% of revenue. They have a new product there that's really starting to work. And the trick with Cisco, what people are looking for is they really want to see that company start to get out of the woods in terms of growing again. And I think we're getting there. This is the first quarter that really looked good to me, like they're on a more sustained growth trajectory.
So let's talk about that product that's starting to work, because I think it tells us everything. That's the, what's the Catalyst 1900?
It's the switch? The Catalyst 9000 switch. It's a new...
The 9000. I'm so old, I'm not looking back at the 1900. No, I think that this is everything. It tells us everything we need to know about what's going on in the world of hardware. Cisco, a company that has made boxes to stick in the back of offices and data centers, now has this Catalyst 9000 that does what?
Well, it's much more software intensive, so you can really drive the network, if you will, from a software dashboard. It's all sort of point and click in terms of provisioning new circuits and setting up your network. And that's very attractive to companies and to carriers, as they want to sort of minimize the IT personnel in an organization, and also as security gets more important. So that software-driven element of hardware is on the rise, and Cisco was a little bit slow in getting there. I think they're there now, and I think the momentum is going to continue to build for them.
Well, and to that point, it also seems like other companies that have been trying to get in there, VMware in particular, are really facing competition from Cisco on the software side, where the VMware and the like seem to have had an advantage, maybe not as strong anymore.
Yeah, I mean, and Cisco was a little behind the curve as well. As you mentioned, you know, the big companies like VMware have really had sort of a hard time turning that battleship, if you will. And smaller, more nimble companies like Arista on the switch side have come in and had very good success there.
Yeah, indeed, and there are competitors out there. Well, as it relates to the buyback, and I just tweeted something about this before I ran to the set here. Yes, they're committing $25 billion to the buyback. Yes, it'll reduce the shares outstanding, or will it? The company has been issuing so much stock to do acquisitions over the years that you've seen the diluted share count jump every single quarter, I think, for the last 16. At what point do we see a buyback as being something that's changing the nature of the income statement as opposed to just fixing something that was the nature of the income statement?
Honestly, Corey, that's tough to say because, as you mentioned, Cisco really is an acquisition growth story. When you're as big as Cisco, sometimes you need to buy your way into new markets. Most recently, they did it with BroadSoft in the collaboration space. And so it's tough to predict their behavior on that front, and therefore it's tough to predict where the share count's going to go. But this is a big buyback. This really is good news for current shareholders, I think.
Yeah, last question here as it relates to Cisco here. I mean, you said on the radio something I thought that was really important. You said this is a growth story again.
They are getting there. You know, the orders are something I really watch because that sort of gives you a forward view of the business. In this quarter, orders were up 5%, which is, you know, against a revenue forecast of 3 to 5% for next quarter. It gives you a lot of comfort. And what that tells me is they're starting to gain momentum. They're really starting to gain traction with those new products. And that really is the key to this story here.
All right, great stuff. John Butler, thank you so much. Appreciate your time both on the radio and on television.
Thank you, Corey.
All right, well, Cisco Chairman and CEO Chuck Robbins doing a great job, as you just heard. Well, he's going to talk about the company's results tomorrow morning on Bloomberg Daybreak America's 9:30 back east at 6:30 out here in the west for you and I are Emily Chang. Emily Chang, you are in such a perfect place. The conference you're at, I love that you're there, although it's going to be information overload, because the people are so plugged into what's going on in technology, but also what's going on in the stock prices. And today was kind of a remarkable day in the markets.
Right. Corey, I actually wanted to ask you to walk us through what happened today and talk to us a little bit about how it fits into the broader volatility. We're going to have Goldman Sachs president and co-COO David Solomon coming up, and he does expound on that a little bit. You know, Lloyd Blankfein has said in the past he thinks actually this is a good environment for trading. But what did you see today?
Well, I saw a bunch of stuff. So obviously what everyone was waiting for was a CPI number. We knew that, let's go back to last Friday, or 2 Fridays ago, right? So what, 10 days ago or so, when we saw this sort of amazing, very slight increase in the employment number and wages, right? And so we've been waiting for wages to go up. Every economist under the sun has been telling us that wages were going to go up, and yet we didn't see it and didn't see it. We finally saw it as widely predicted, and the market went haywire. The VIX went through the roof. The volatility index went through the roof. The volatility index had been trading at 10 or even as low as high 9s for months, even years, with very few increases above 12 or 15. Suddenly shoots up to near 15, to near 19, to 30, blows up the XIV reverse traded exchange traded note, takes billions of dollars out of the market and causes this volatility like we've never seen. For the first time ever, 2 weeks ago, we saw that the future volatilities contract of 1 month and 2 months, both up 80% in the same day. It was incredible. So today, we get the CPI with a higher print than expected, and you think, oh, here we go again. And the market waved it off, and the stocks rallied.
And what about any of the FANG stocks in particular? You know, obviously we've been closely tracking what's going on with Facebook, Apple, Alphabet, Amazon. What did you see there?
Well, I think what we saw really was a reversion back to the way the market has been trading for the last few years, at least for one day, where we saw a rally sort of in spite of some of the news that was out there that might be bad for the economy overall, that is increasing prices. And that we saw that generally across the board stocks rise, and individual stock stories did quite well. We saw companies like Fossil, the watchmaker, says they got 14% of their sales were smartwatches, right? A little tech boost for the watchmaker. They call them wearables. I think every watch is a wearable, right? But in any case, their wearable sector did enough to give the stock an 80% boost today, with the belief that, yes, technology is the future. We see stories like TripAdvisor after the close reporting a strong quarter. The stock's up really big in after-hours trading. And I think, again, it shows that the individual stock stories are doing very well. When the news is good, the stock feels great. And across the board, people wanted to buy stocks today, and you saw that across the tape.
All right, Corey Johnson, our editor-at-large, back at home base. Thanks so much for breaking it down. Coming up, we're going to talk about all of it with Heather Bellini, Goldman Sachs tech analyst. That is next. This is Bloomberg, live from the Goldman Sachs Technology Conference in San Francisco. Welcome back to the Goldman Sachs Technology Conference in San Francisco. We've been hearing from Twitter and Square CEO Jack Dorsey, Uber CEO Dara Khosrowshahi. Coming up, I'll be speaking with David Solomon, president of Goldman Sachs and co-COO. But with us right now, Heather Bellini, Goldman Sachs tech analyst, widely followed. Heather, I want to start with you on Facebook, because no company seems to be getting quite pummeled in Silicon Valley like Facebook has been recently. Unilever now threatening to pull their ads because of the platform being what they call a swamp for extremism and hate. You know, how concerning is this?
So, look, I think if you are a chief marketing officer, you want to make sure that you're protecting your brand. And so brand safety is top of mind. It's not just for Facebook, but it's also for, I would say, YouTube with Google. It has been experiencing the same type of feedback. I think maybe some of this might be a little bit overdone. I don't think that Facebook and Google are trying to, create an environment where this type of backlash is occurring, but I do think they're making a lot of efforts and inroads, whether it's, investing in people to try and make sure they're getting rid of this content before it ever comes online, or investing in AI and machine learning to do that. So, look, I think these are platforms that have exploded over a very short period of time, and I think it's kind of an iterative process that I think they're truly focused on.
How much do you think it will impact revenue, though? I mean, do you think it will have a material impact on revenue? So
at the end of the day, you also have to think about the platforms, right? Whether it's Facebook, again, or whether it's Google with YouTube. These are multi-billion user platforms, right? So if you look at daily active users for Facebook, 1.4 billion, there's probably 1.5 billion plus active users on YouTube, if you look at the measurement there. If you're an advertiser, are you going to walk away from that many eyeballs? And you've heard Sheryl Sandberg say many times, like, we could deliver the Super Bowl in terms of reach every day to U.S. advertisers, right? Just domestically focused advertisers. So I think this is kind of a call to action. I think the CMOs of these big, especially the CPG companies, want to see more being done. But I also think Facebook and Google are responding in kind. And again, I think it's an iterative process, but I don't think they can ignore these platforms.
What about the fact that, for the first time, users in the U.S. didn't grow for Facebook last quarter?
Yeah,
Big deal or no?
Well, so they declined. I think it was 700,000, 800,000 users sequentially. The U.S. and Canada are about 187, just under 190 million users. You're at a point where even when we model out, we don't really model a lot of growth, if any, in daily active users for the company, just given the percentage of the population that they're already hitting. So I don't think that should be a big surprise. And if you look at where their growth and usage has been, it has been predominantly outside the U.S. and in a lot of emerging economies. So it wasn't all that surprising to me. What you have to continue to focus on, again, is the value that the advertisers are getting from this platform, despite what they might be saying in back channels, is that they are getting a lot of improved targeting, better targeting than they could get on any other medium. And they are seeing return on investment on these ads continue to go up. So Facebook continues to do things that kind of improves the reach improves the targeting, and therefore you're seeing ad pricing go up for the companies. So it's kind of working the way it should, we feel, at this point.
You also cover Alphabet. You mentioned YouTube. YouTube CEO Susan Wojcicki recently said Facebook should get back to baby pictures. In fact, Facebook has been making algorithmic changes to show more posts from friends and family. But, you know, interesting to see the dichotomy there, and obviously YouTube struggling with its own issues. What do you think the big headwinds are for YouTube?
So, I mean, look, they've got the brand safety issue to be aware of as well. I mean, we talk to ad partners and agencies a lot, and I would say they're just as concerned about that on YouTube as they are with Facebook or maybe some of the other social media platforms. So I think, again, in partnership with the advertisers and from a measurement perspective, people just want to see the standards continue to move in the right direction. And I think, unfortunately, it's been a sign of the times for the last year or so, kind of how this message has evolved. And these platforms maybe did kind of get, you know, maybe they not that they went off the rails, but I would say the issue has been just from what users have been posting on all of these sites. I think collectively everyone is more focused on it, and you've started to see that change with some of the algorithmic changes again on Facebook, but I think YouTube's focused on it as well.
Interesting numbers out recently on lobbying, and Google outspent every other tech company, and Facebook actually hasn't spent very much, and obviously there's a lot at stake for Facebook right now. Do you see headwinds coming from their sort of relationship with Washington?
So I think on the third quarter conference call, their earnings call, which was early November, Mark Zuckerberg tried to make a statement by saying he was going to hire all these extra people to start policing the site, something we were talking about before. He then announced the algorithmic changes in early January. So I do feel like they're trying to show not just their users, but also the political establishments that they're trying to do what's right and they're trying to police themselves. So does that mean they're not going to spend on lobbyists and start to get, you know, much bigger there like Google? Probably not. I would probably say you would see it probably moving more towards maybe not spending as much as Google does, but moving in that direction. But I do think that at least they're trying to show everybody that this is front and center and really important to the company's strategy. There's
been talk that Amazon could soon surpass Facebook as the second biggest platform for digital ad dollars right now. Obviously, Google is dominant, then Facebook. Do you see a potential shakeup in the hierarchy? Well, so Heath Terry covers Amazon for us, and by his estimates, I think in 2017, that ad business was about a $2.5 billion business, and about $3.7 billion this year is his forecast. So it's going to take a while for them to be able to surpass Facebook and take that number 2 position. I certainly don't think anyone should discount the power of Amazon and its Prime users and just, you know, how many people go there to shop. So I think it's something that everyone needs to be mindful of. And we definitely hear a lot of interest from ad partners telling us that people are kicking the tires and at least looking to that as an opportunity to find that third platform, which right now has been slightly more elusive. So what are the big issues that you're watching for Google and Facebook over 2018? Yeah, so for us, for Facebook in particular, we're very focused on Facebook Watch as another way to engage with your users. So, you know, for us, we think about, you know, time spent. There's only so many minutes in a day that you're going to spend sifting through your current Facebook feed or your Instagram feed. So how else can they improve engagement or increase engagement with people like you and I? And that might be, you know, if you're a Patriots fan, starting to watch Time versus Tom, which is, or Tom versus Time, which is the, you know, the docu-series, 3 15-minute series. That would mean you're spending more time interacting with the platform. So I see Facebook Watch, that's something that we're spending a lot of time on right now, and, you know, something that we hope to see evolve into, again, a much bigger reason why we're going to want to go to the app. All right, Heather Bellini, Goldman Sachs tech analyst. Always great to have you here on the show. Thanks so much for stopping by. Coming up, we're going to talk a little bit more about Amazon's lobbying efforts in particular and how their strategy is changing. That is next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang. I want to get straight to Corey Johnson, our editor-at-large at home base, talking about Amazon. Corey?
Yeah, well, Emily, you just had a great interview talking about what other tech companies are doing in Washington. Amazon, no slouch there. A new report from Bloomberg takes a comprehensive look at all the things Amazon is doing, how their lobbying and strategy has changed over time dramatically. Naomi Nix covers lobbying for big tech firms for Bloomberg News. She's in Washington, joined us right now. What's Amazon doing, Naomi?
They have dramatically increased the investment they're making in lobbying in Washington. In fact, the percentage of money they've spent on this has grown by 400%. It's now more than 12 million. It used to be just under 3 million in 2012. They're not only spending.
Is that 400%? 400% year over year? That's huge.
Yeah, it's huge. It's huge. And not only are they spending more, they're reaching out to more government entities. They have grown the number of, they're reaching out to, again, to not only to the White House and Congress, but, to agencies that deal with the Postal Service and trucking regulations. And they're also covering a lot more issues. In fact, they cover more issues than any of the other tech companies we've looked at.
So are they covering more issues because they're doing more, or are they covering more issues because Amazon's just huge right now?
It's really both. The growth in the company's business model has really spurred the growth in lobbying here in Washington. So the fact that they are, looking at, say, expanding into drone deliveries made them want to lobby the FAA and tackle the regulations regarding drones right now. And so as their business model grows, as they grow into new markets, whether it's drone deliveries, whether it's healthcare, we should expect Amazon to continue lobbying other agencies to get the kind of changes they need to seize those business opportunities.
Great stuff, Naomi. Next, thank you very much. We appreciate it. Good story. Everyone check that out on Bloomberg.com or on the Bloomberg terminal if you should be so lucky. Hey, I want to get to a breaking headline real quick here. We got a filing from Berkshire Hathaway. Berkshire Hathaway, of course, known for all the companies it owns, but also the companies that Warren Buffett and team invest in. Well, one of them is IBM. And IBM has done poorly over the entire course of Berkshire's investment. Now, Berkshire really pulling the plug, selling most of its stake, over 95% of its stake, down to 2 million shares, kind of giving up on IBM, Emily. So all the reporting we do how rough things are at IBM, Berkshire Hathaway was an investment totally missed this with IBM.
All right, Corey Johnson, our editor-at-large, thanks so much. Coming up, the interview you have been waiting for, David Solomon, president and co-COO of Goldman Sachs. I sat down with him. We talk tech, we talk valuations. You don't want to miss it. That is next. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Here's a check of your first word news. Authorities say an 18-year-old suspect in this afternoon shooting at a Florida high school is in custody. Broward County officials say there are at least 14 victims. SWAT teams converged on Marjorie Stoneman Douglas High School in Parkland as students with their hands raised came running out. After days of negative press following a former aide accused of domestic violence, President Trump today sought to make clear his thoughts on the issue.
Everybody here knows that. I am totally opposed to domestic violence of any kind. Everyone knows that, and it almost wouldn't even have to be said. So now you hear it, but you all know it.
At an event in Washington, Vice President Pence admitted that the White House could have handled the situation with former Staff Secretary Rob Porter better. Porter resigned last week after his two ex-wives came forward with allegations of abuse. And today, Congressman Trey Gowdy, chair of the House Oversight Committee, said the panel wants to know how Porter was allowed to work at the White House under an interim security clearance despite the abuse allegations. Meantime, Vice President Mike Pence is offering White House Chief of Staff John Kelly a vote of confidence, saying the retired Marine general has, quote, done a remarkable job for President Trump. In an interview with Axios, the vice president said he and Trump look forward to continuing to work with Kelly. French President Emmanuel Macron's office is closing the press room inside the presidential palace. Advisors for Macron announced today that journalists will have less access to presidential activity. A government spokesman insisted the move was for operational reasons, but one advisor said it was part of the French leader's efforts to control his public image. Three people in a vehicle tried to make an unauthorized entry onto the National Security Agency at Fort Meade, Maryland. That happened this morning. The incident led to gunfire and left 3 people injured. Police say all of the gunfire was directed toward the vehicle and not the NSA building. South African President Jacob Zuma, whose nearly 9-year tenure has been marred by corruption scandals, has resigned. Zuma made the announcement late Wednesday.
No life should be lost in my name, and also the ANC should never be divided in my name. I have therefore come to the decision to resign as President of the Republic with immediate effect.
The African National Congress is expressing gratitude for Zuma's loyal service. Global news 24 hours a day right here on Bloomberg. Bloomberg Technology is straight ahead.
Welcome back to Bloomberg Technology, live from the Goldman Sachs Technology Conference in the heart of San Francisco. We've been hearing tech CEOs and investors speaking all day long. And earlier today, I sat down with David Solomon, president and co-COO of Goldman Sachs. And we started by talking about why they do this conference every year, what they get out of it. Is it just to keep their ear to the ground for potential deals, potential M&A, or is there more? Take a listen.
Look, the year has set up in a way that I think it should be very, very constructive, both for M&A activity and for IPO activity. You know, IPO activity started to pick up a little bit toward the end of 2017. We've got a very, very healthy IPO backlog. But we also have an environment, for a variety of reasons, why 2018 should set up to be a pretty active year for strategic M&A in the technology space.
In Silicon Valley, there's such a focus on private market valuations. Are they healthy right now or bubbly?
Look, I think private market valuations actually have tightened a little bit over the course of the last 12 to 24 months. There's no question, meaning capital has been a little bit tighter, you know, for private market fundraising. I wouldn't say that valuations are bubbly, but there's no question that in an environment for the last 5 years where growth was sluggish, investors were really looking for a place where there was growth, and Silicon Valley technology was a place where there was a lot of growth. Look, when you look at large cap tech, it's really remarkable what's going on. You look at a company like Amazon, it's growing 30% on $180 billion of revenues. You know, you look at a company like Facebook on $40 billion of revenue, it's growing 40%. And so, you know, these are big companies with large market caps. They're growing very, very quickly, and that obviously creates interest around other businesses that touch or affect that whole technology space. So
by tightening, are you saying valuations are sort of plateauing or going down?
I don't think valuations are going down. As long as growth continues and the trajectory we're on continues, I think there'll be plenty of capital available. Each company is an individual decision, but some of the, let's say, the ebullience around private capital raising has tightened up a little bit.
Lloyd has said the environment right now is actually better for trading. You know, we are seeing a lot of volatility. Do you expect that to keep up, and how do you take advantage of it?
Well, there's no question that the volatility we've seen over the last couple of weeks is a result of what we were talking about with respect to economic growth. If people are seeing signs of wages actually increasing, if people think that there's a chance of some inflation in the economy, and you see these strong growth numbers coming out, that's going to bring volatility back to a more normal environment. So there's no question that volatility spiked a little bit over the course of the last couple of weeks, but remember, it's coming up off of extraordinary lows, and it would be healthy at this point for volatility to be more normalized in the context of a longer market period. So I would expect to see more of a normalization of volatility versus the ultra-low volatility environment we've been in for the last couple of years.
You are advising Qualcomm on a potential takeover by Broadcom. I know you can't speak to the specifics of of this, but at $100 billion, do you think that size of a deal will be an outlier, or would be an outlier?
Look, $100 billion is still a very, very large deal by any stretch. You know, one of the things that's interesting, you know, bringing us back to the technology space, is when you look at large cap tech and these companies that have $5 billion plus market caps, they really haven't participated in the M&A consolidation activity at all. They've pretty much grown organically, and they are growing organically. And so is it possible that one of these big companies steps in and wants to enter a space and does something that's very significant in size? Sure, that's possible. But I think by and large, $100 billion is going to continue to be a very big M&A transaction.
Speaking about cryptocurrency, obviously so much curiosity about it. You know, how can Goldman help clients who are interested?
Well, we're watching the space, and you know, we're interested too. And when our clients are coming to us saying, "Hey, we want to learn about this," you know, we're learning too. In the moment, you know, we are, you know, clearing, you know, some future product, you know, for some clients. That activity is small. You know, we have no immediate plans to start trading these currencies. And you know, look, there's a lot of hype, there's a lot of activity around this. We're watching the space cautiously and, you know, trying to watch and learn like everybody else. We think blockchain, very, very interesting technology, but, you know, whether or not cryptocurrencies become a real store of value and how that all evolves, that's something we're going to watch very carefully.
You've been vocal about hiring and promoting women. What specifically are you doing at Goldman Sachs to make that happen? As we know, Silicon Valley has a big problem.
Diversity is hugely important to us at Goldman Sachs. It's hugely important for our business. And for us to be successful with our clients and really excel as a human capital organization, we have to really have a very, very diverse organization. And so for 20 years, we've been working at improving the diversity of our business. One of the things we're very focused on right now is we hire a lot of people every year, particularly out of school young people. And we've been very, very focused on trying to make sure the diversity of that group of people that we hire every year out of school matches the diversity of the world that we're hiring from, whether it's women or it's Black Americans or it's Hispanic Americans. You know, we're looking for opportunities to continue to increase the diversity of our population. And over the course of the last year, we've made real progress. We've brought the diversity of women in our summer class that's going to come in this year up from something in the low 40s up to the higher 40s by really focusing on that entry point in the pipeline. And if you do that, and your entry point in the pipeline where you're hiring a lot of people creates a more diverse population over time, because attrition for men and women is pretty much the same, you should do better at having a broader pool to promote more women through the organization. So we continue to be very focused on that.
I found it interesting that if you look at the numbers at the top banks, actually they're closer to 50-50. There's still some work to do when it comes to getting women in leadership, but when you look at Silicon Valley, you know, the numbers are dismal, more like 25%. Women account for 7% of investors. How is it possible that Wall Street is doing a better job of this than Silicon Valley?
Well, you know, what I would say is that you have to put some of this in perspective. When you talk about Silicon Valley, you're talking broadly about a broad universe, but a lot of the companies that we've been talking about in the last few minutes when we've been talking about technology companies, when you talk about Google, it's not 20 years old yet. You talk about Facebook, it's 15 years old. You know, Amazon, a little bit more than 20 years old. These are very young companies. And so in the context of getting focus on this, they've only gotten focused on it more recently. Goldman Sachs started getting focused on this, you know, really in the early 90s, the mid 90s, and we still have a lot more work to do, but we've made a lot of progress because we've had that focus. We've had leadership from the top really focused on this as a real strategic priority for the organization. Silicon Valley's getting focused on it. My guess is they'll make progress, but it takes time.
David Solomon there, President and co-COO of Goldman Sachs. And coming up, we are going to be speaking with famed venture capitalist Bill Gurley of Benchmark Capital, also, of course, big-time Uber investor, also in Stitch Fix. Looking forward to that one just after this quick break. This is Bloomberg. Welcome back to Bloomberg Technology, live from the Goldman Sachs Tech Conference in San Francisco. I'm here with Bill Gurley, venture capitalist, partner at Benchmark Capital, and investor in Uber, Stitch Fix, and more, and Selena Wang, our Bloomberg Tech reporter. Bill, you just got off stage. And, you know, one of the things that you are sounding the alarm about right now is that VCs, you say, are being too nice. You know, nobody wants to be a no man, but that's actually hurting the industry and hurting companies. What are you most worried about?
Well, I mean, this is something that's probably been going on gradually for like a 20-year period rather than something that just happened yesterday. If you go back in, years, decades ago in the venture industry, there were famous people who were known, like Don Valentine was known for like coming into a boardroom and demanding. The world was more oligopic back then, and that's the issue, right? Hyper competition has made it such that the majority of VC's biggest fear is missing out on the next investment. And so they're afraid to have a reputation as someone who asks too many questions or push too hard. And I think it's led to a situation where there's not a lot of stewardship for discipline and results and that kind of thing.
But what can be done about that?
I don't know. I mean, it's a tricky problem because the thing that led us here is this systematic competitive front.
Did that happen at Uber?
I didn't bring it up related to that. I think it's something that's when I talk to there's a lot of buy-side investors here who are increasingly reaching down into these private companies, and when they hear that, they're like, oh, that's what we just experienced. Like I think it's a broad-based problem.
And speaking of that environment of competition, we've seen this low interest rate environment fuel a lot of this capital. So how is the rate increase going to impact the VC industry?
Well, the smartest investors in the world tell you macro is impossible, and so I offer that caveat before I offer any commentary on that front. I think it's extremely likely, so high probability, that a lot of the issues that exist today in our industry and a lot of investment categories are due to this excessively low interest rates. Druckenmiller, just who's someone that's made a name in macro investing, says if you give Texas Oilmen the ability to drill holes with someone else's money, they'll drill as many as you possibly can. And so low interest rates drive speculation, and there's clearly more money in late stage available to these private companies than ever before. I mean, $500 billion private rounds was unthinkable. And so I don't know what changes it. The smart people would say that inflation's on the come and that's going to cause the Fed to raise. And it may not be a wall we want to actually look over. We'll see.
You mentioned on stage you've talked to Masa. SoftBank, is coming in now with a first look at deals, more money than anyone. Yep. Is that a concern for you? Is it boxing you and other VCs out? Well,
look, I think that one of the things I talk a lot about on stage is that it's a natural part of a company's evolution to eventually go public. And one of the things that I believe strongly that I think is less well understood is that being public actually helps the companies run better. It's an enforced discipline. These people are extremely smart to ask very provocative questions, and you have to be on your A game. I equate it to playing in the NFL versus college. The only risk the biggest risk I see is that if these massive amounts of money, which they're kind of already doing, delay that natural evolution. But here's how I look at it: like it or not, it's a reality. It's a reality we have to adapt to, and so we're spending time figuring out how to co-evolve. And we're always forced to play the game on the field. It's part of the game.
And Uber's financials just came out yesterday, and help us make sense of that huge spread between the GAAP net loss and the adjusted EBITDA, and are those losses ever going to go away?
Well, so one good thing is I switched the board seat with my partner, so I'm not actually involved in those things being distributed. So I'm further away, and I'm super excited about Dara and Barney and Tony and everyone and the things they're accomplishing, like with the Waymo thing. There are some really strong profit drivers, I think, at the high end of the market, some of the other geographies, and you're starting to hear the Uber Eats business is being very, very successful. And so I'm very optimistic. We got a great new team on board that know how to run profitable companies. It'll take some time. And you are forced to play this game on the field issue, right? Because there's still quite a bit of capital.
We're making that a t-shirt for you, Bill.
Okay.
Uber Waymo settled. Yep. How do you feel about that, and what does it signify? Now they've avoided this long drawn out public trial, but how do you feel about sort of the new guard, and are you hopeful that there aren't more skeletons in the closet?
Look, I am super excited about where we are now versus where we were, and I think it's very clear from London, LATAM, Waymo, like the Dara starting to build up a track record of having put out these fires and attacked these problems. And so I don't know if there are more, there may be more, but I have a high degree of confidence that our probability of moving through them is way better than it was. And I think he's starting to earn credibility in that role.
And you're an investor in both Benchmark is in HackerOne and Uber. Did you know anything about the hack before?
I did not.
Dar became CEO?
I did not. I did not.
And do you think that this is going to have an impact?
But both Uber and Martin from HackerOne spoke in front of the Senate last week and answered questions and went through all those details.
And on that point, do you think the developments here are going to impact how bug bounty programs are run?
It's possible. I think that people want to make sure that the structure and the systems that are set up are being used in the appropriate ways. And I think both Dar's made some comments and Martin's made some comments about if they could do it over again, they would change those. Those become new policies that get built into everyone's program. I still think it is the very, as Sheryl Sandberg has said this, it is the very best way to protect yourself. It is the only offensive solution. Most of the security solutions are defensive, where you're just building a bigger and bigger dam and trying to hold people out. This is the most leveraged way to attack it.
I just wrote a whole book about improving diversity in Silicon Valley.
Yes.
Katrina Lake, one of your founders, we tell her story, and you were one of her investors, and you said yes when a lot of other people said no. You've also hired Sarah Tavel at Benchmark.
Yeah.
What specifically are you doing at Benchmark to get more women on the Benchmark team and to improve diversity at your portfolio?
Well, I think there are a couple of trends that are super helpful in this regard. I think people like you sounding the alarm and raising awareness is super helpful, and what you've done is amazing, and all these people are talking about it, and it heightens people's attention to it. I also think that the other thing we can do is point out the progress a little bit more maybe than we have. If I look at all of our companies in the executive room, it's remarkably different today as a percentage than it was. Even in the boardroom, you know, Katrina's employee base is majority women, executive team's majority women, board. It's an outlier, I know, but like it's a data point, and highlighting that data point can be successful. Just by happenstance, I think, and it relates to the progress that's being made. I sit on 4 boards where the women are founders. Nextdoor, Marco Polo, Katrina, and Heather with Solve Health. You know, so things are happening, and I think it's continued attention from the here's the problem, and then continued attention about progress. Because by drawing attention to the progress, you invite more people to try, which is helpful in the overall process.
All right, Bill Gurley, partner at Benchmark Capital. Thank you so much for joining us, and Selena Wang as well.
Selena.
Great to have you and to hear about what you guys are doing. All right, coming up, we're going to talk about Warren Buffett and IBM. That is next. This is Bloomberg. Welcome back to Bloomberg Tech, live from the Goldman Sachs Tech Conference in San Francisco. We're going to get straight back to our editor-at-large, Corey Johnson. And news, Corey, that Warren Buffett has dramatically reduced its stake in IBM. What can you tell us?
Well, he's throwing in the towel. He's looking at what happened to the stock, and he's decided to get out most of his position. Somebody knows a lot about IBM and pretty much everything else. Tom Giles joins us right now, Bloomberg Technology editor. Glad to have you sitting across from me here.
Good to be here, Corey.
So I just pulled up this thing on the IBM on my Bloomberg terminal. I want to show it to you and to our viewers, which it shows what happened to IBM stock while Buffett was building his position. So if you look over here on the left, you see Buffett increases his position. That's the green line. As the stock's around here, unlike many Warren Buffett holdings, the stock didn't go up while he held it. It went down.
It went the wrong way.
Yeah.
He held it during a really rough period in the IBM story. After Ginny Rometty took over from her predecessor, Palmisano, she really tried to right the ship. She changed some of the ways that they were doing things. The buyback slowed down. She really tried to invest in making this a provider of cloud computing services and getting away from the old IBM mainframes, services, hardware, etc. She's come a long way, but it happened very, very slowly. It's a big ship, and you don't turn a big ship overnight.
I think you're being too nice. I've never been accused of that, at least sitting in this chair. I looked at that holding when he took it and thought, this is a company who's... I was meeting with a CEO of an investment banking firm, an important investment banking firm. It was off the record meeting this morning, and we happened to talk about IBM.
Right.
And we all laughed around the table. I said, yeah, shrinking revenues and rising earnings per share. Who's going to fall for that? Warren Buffett fell for that?
Of all people. And this is a guy who for many years avoided technology, feeling like I want to leave that to people who know more about it. He wanted, traditionally he invested in things that you understand, that I get. McDonald's, for example, is one of the notable investments.
But he also has owned American Express, and he's owned a lot of Wells Fargo. So he's been in all kinds of things.
Things that he understood and Berkshire Hathaway understood. Tech they avoided, although they've been changing that. Big holder of Apple lately.
Right.
So he's definitely changed his tune in that regard. And Charlie Munger told Bloomberg a while back, that aversion to technology might have been one of our biggest mistakes. And for some of these companies, they were absolutely right.
Last thing I'll say about it, IBM's profits in this time went from $16 billion a year to $6 billion a year. IBM's a worse company than it was when Buffett first got involved, even though his investment didn't do terribly.
But they're showing signs of life.
You're so kind. I'm so not. You're the best. Tom Giles, Bloomberg Technology editor. Emily, isn't Tom Giles the best? He's the best.
He is the best, as always. Tom Giles there, our senior tech editor, and Corey Johnson, our editor at large. Thanks for holding it down at home base. We are live here at the Goldman Sachs Tech Conference in San Francisco. Thank you so much for watching. We'll be back at home base tomorrow. This is Bloomberg.